We'll now revise the chapter of Competition Act 2002. Right. Fortunately, unfortunately, the term competition has not been defined in the Act, but we must know about what is competition before we can proceed with the chapter. Although, on the term competition, you won't be asked any question, but competition basically is not the competition that we talk in general parlance with our peers or something like that. No, we are talking about the market rivalry. What type of market rivalry, ma'am? There are so many business entrepreneurs who eventually sell products or sell their services. So, whatever economic rivalry is going on between such market players to attract the customers, that is competition. Now, sometimes it is presumed that competition is not a very good thing, but it is undoubtedly one of the best things an economy can be gifted with. Competition by fair means, by healthy means, is extremely helpful in increasing the productivity and efficiency of any organization. How, ma'am? If I, as a customer, go out and do not have a choice, like I go out to a departmental store and I have six shampoos out there, I can see the quality, I can compare the prices, and I can get the best one suited for me according to my needs. But if I don't have a choice and maybe a shampoo is available at a price of 10,000, well, I would stop like washing off my hairs, right? So competition helps to reduce the prices. Everyone tries to become cost effective, improves the quality, and also brings innovation in the product. So undoubtedly competition is something which is needed, and from customers perspective as well as economy, there is utmost need of competition, and it's highly beneficial. Earlier we had an act, MRTP, which did not really regulate competition but tried to curb competition somehow, and that's why it was repealed and Competition Act 2002 came into effect, which focuses on promoting more of competition because it is healthy, on protecting the consumer's interest, and ensuring that everyone has the freedom of trade, but preventing those practices which hamper competition, right? So that's why MRTP Act got repealed, and we had a new Competition Act which has nine chapters. Actually, not nine. I would say 1 to 8, then 8A, and then 9. Right. And it has a few sections in every chapter. Chapter 1, preliminary. Chapter 2, the most important chapter of this particular act, which talks about three things: anti competitive agreements, abuse of dominant position, and combinations. Then chapter 3, it's all about competition commission, and thereafter we have the other sections one by one. In the last chapter, miscellaneous, we don't have to read everything, but whatever we have to read out of that, the most important one is chapter 2, out of which maximum questions are being asked. Other than that, sometimes composition of CCI and all is also asked, or sometimes appeal is also asked in examination. So the Act extends to whole of India. The Act has come with these objectives. As we discussed, Section 2 talks about the definition, which we're not going to discuss. As and when needed, I'll tell you a few definitions while through our revisions. The very first section, chapter number 2, which talks about basically three things. The first thing, anti-competitive agreements, which is given in section number 3. To understand anti-competitive agreements, we first need to understand what do you mean by agreement. When I'm talking about agreement, it need not necessarily be some formal type of arrangement in writing. No, it can be any arrangement, written, oral, formal, informal. It can be any understanding, or it can be doing anything together. Like we have decided that you also do this, I'll also do this. So action and concert can also be an agreement. And sometimes it may so happen that we have entered into such an arrangement, or we have come to such a consensus, that it is not something that if you deny, you will be dragged to the court. That means it is something which is not enforceable, but still it will be an agreement. So agreement Maybe it is enforceable. Maybe we have decided something legal that we can make the other party bound, or maybe something illegal. It doesn't matter. It could be an action in concert. It could be an understanding. It could be an arrangement. Anything it could be. They are called as agreements. Now, my dear, agreements are of two types: vertical and horizontal. Vertical and horizontal. Vertical means the agreement between enterprises or people at different production chain. What is production chain? You produce the goods, you supply the goods are being delivered, the goods are being sold. So we have the production chain. We procure raw material till the time of it is delivered to the customers. We have that production chain or the supply chain, you may call. Now, in that, you have different people. Like we have the manufacturer, we have the wholesaler, we have the retailer, right? We have these type of people. There may be one person, there may be a group of people, right? We have distributors. So we have different people in this production chain, right? Now, if people are entering into an agreement with each other, let's say my example, I am the manufacturer, you can say, of the classes, and there is some distributor of the classes. So there are different distributor. I enter into an agreement with one of the distributor that you are not going to sell my class below this price. That means I have entered into an agreement of resale price maintenance. Do you think there is anything wrong in it? Well, no, ma'am. You can say such thing. You can put such a condition. So I have entered into an agreement like this. So it is ideally not something which is wrong at prima facie, or it is not something which is hampering the competition. No, the other people are still competing, right? You get my point. So we have this vertical agreements. Now, when I talk about horizontal agreements, horizontal means between the same stage of production chain. That is, if I enter into an agreement with all the other law teachers and we come to a consensus that we are not going to sell the classes below 20,000. Now, it is hampering competition. It is not good for the benefit of customers or consumers, right? So this is something which is not good. So now listen to me very carefully. When I talk about vertical agreements, they may be good, they may not be good, right, for competition. So prima facie, we presume then that, okay, fine, vertical agreements are acceptable. But if they create a barrier to new people. That means I am entering into such an agreement that new people are unable to enter, or I'm driving out the existing competition, or I'm hindering the entry, or it is not beneficial for the consumers, or it is affecting the improvement or development. Then this is going to be considered as having an appreciable adverse effect on competition, and hence this agreement will not be bring into effect. It is going to be void. Okay, so vertical agreements, prima facie, they're not anti-competitive. However, if this is proved, then they are anti-competitive. So how do we determine whether they are anti-competitive or not? By looking at the factors, right? However, when I talk about horizontal agreements, that means between the same production chain, that is generally between the rivals, they are somehow presumed to be anti-competitive. So we have section 3, we have two things. Point number 1, any agreement that you enter to, whether horizontal or vertical, is going to be, if on these factors is anti-competitive, that is going to be void. However, there are certain agreements which are presumed to be anti-competitive. That means the people of same production chain, all the manufacturers decided that we are not going to give any supposedly they are producing tomatoes maybe, so they are not going to supply tomatoes for 15 days. If they do not supply tomatoes for 15 days, there will be ample of deficit in the whole nation, and then they can inflate the prices, right? So they are limiting the production. What is cartel? Cartel is a very important definition in this particular chapter. Cartel is any group of association or any group of people who are trying to limit or control the price, the production or the distribution, sale, anything. So collectively, they are coming together and they're limiting or controlling these things. Then that is known as any association, any group of people, that is known as cartel. So formation of cartels for this purpose is not allowed, and it is presumed to be anti-competitive. Even if you say, no, no, we have come together for this, this was going to be beneficial. No, you cannot prove that. This is going to be presumed to be anti-competitive at the very first place, right? Okay. Likewise, let's have a look at other examples also. When I talk about the vertical agreements, what are the other examples, ma'am? We have tie-in arrangements where people are being bound that, okay, fine, if you want this product, you have to buy this product as well. So seller maybe puts some condition that you have to buy this on your second purchase or something like that, right? So you are somehow trying or binding the other person, right? If that's causing a hindrance to uh, other people to enter into the market, then it may be anti-competitive or any other factor. Otherwise, it will not be anti-competitive. There are many exclusive agreements also, like exclusive supply agreement, wherein you enter into an agreement restricting in any manner the purchase in the course of his trade from acquiring goods other than those of the seller. That means you are going to acquire only my goods, right? So that is exclusive supply. So exclusivity agreements are also there. Sometimes you refuse that, okay, I'm not going to deal with you, right? So refusal to supply a product or service to non-competitors or whatever, there can be a case. And resale price maintenance, I have already told you. So these are all kind of vertical agreements. When I talk about horizontal agreements, one very important thing that you have to remember over here is bid rigging. What is bid rigging, ma'am? What is bidding? Bidding is auction. The auction is something which promotes competition and should be held in a fair manner. That means if there is a house on auction, 5 people are there, they are all going to bid, right? Somebody bids 1 crore, somebody 2, somebody 3, 4, 5, 6, 7, 8, 9, 10, whatever, right? So on 10 crore, finally the deal gets closed, and one person has to pay 10 crore to acquire that house. There was healthy competition, there was revenue generated and everything. So this is something which is healthy. Now, there could be an agreement between these people that we all are going to submit identical bids. Or you four don't bid at all. Now, what are they doing? They were increasing the price. So if they do not bid, the person bid at the price of 50 lakhs. So he said that only I will bid and I'll get this houses at 50 lakhs and I'll pay all of you 1 crore each. He said, fine. We are going to just sit here and not bid at all. So we are going to get 1 crore for nothing. Great. And if I talk about that particular person, he got the house for 4 crores by paying 1 crore each and 50 lakhs. Otherwise, he had to pay 10 crores. So they made a good deal, right? But this is something which is called as bid rigging, right? So this is anything. If you try to squeeze out the bidders or submit identical bids, or you enter into an agreement that we are not going to bid against each other, so that is all something which is bid rigging, and it is presumed to be anti-competitive. Fine. So we have read it, two aspects in section number 3 in anti-competitive agreements. Moving on to the next part, prohibition on abuse of dominant position. Now here, section number 4. First thing, what do you mean by dominant position? See, dominant position, when will you be in a position to dominate someone? When you have that strength, that okay, fine, if he stays or if he goes, I am okay. Then you'll be able to dominate the other person. Otherwise, you'll never be able to dominate, right? So dominance is a position of strength that you can operate independently. Dominant position is not bad. You may have that position of power. That is not bad. You may have that dominance in you. That is not bad. But if you abuse the dominant position, that is incorrect. And that is something which is prohibited. What is abuse, ma'am? Unfair pricing. You're charging 100 rupees for some product which is just worth rupees 5. So unfair pricing or predatory pricing maybe. You know that you have ample of feed, supposedly Reliance. Okay, Reliance comes into a new sector like maybe telecom, and Reliance comes with the plans. Like when Reliance Jio came, it provided like plans. Okay, fine, I'm going to give everything for free. Right. Now, what is it? Reliance has ample of profits in the other sectors. So Reliance is in a position, maybe I'm just not giving you a real life or practical example. This is something which was permitted. So, of course, there was no abuse of dominant position which was identified. However, if you look at the angle, you will realize it. What did they do? They tried to somehow bring down the prices. All the other telecom operators who did not have that strength maybe were not able to compete, right? If you provide a product which everyone else is selling at 10 rupees and you provide the same product at 5 rupees, then how long will the other competitors be able to survive? Because everyone will come to you, so they are making no profits, they're not able to recover their cost. So ultimately a time will come when they will be driven out of the market, and then you can increase the prices just like Reliance Jio did. They could increase the price. Now they can charge whatever price they want to, because a lot of consumers or customers have migrated to the network, right? So this is called as predatory pricing. Please don't ask me, ma'am, how it was allowed and when it was allowed and all that, right? It depends upon case to case. We have a CCI, we have a Competition Commission of India, which also decides whether it is dominant position or not, whether there's abuse or not, and thereafter they pass orders, thereafter they do things, right? We are just discussing the simple case. Limiting production, as we discussed above, barrier to entry or using position. Now, how do you get to know whether you have that dominant position or not? See, I may be a new entrant, right? I may be a new person and I have just come to the market. I'm trying to make a place in the market, and that's why I'm giving things for free, or I'm doing this, or I'm doing that, right? So you can do that. You can do that. Reliance did that. Reliance was new to the sector. So Reliance did not enjoy the dominant position in the telecom sector. So if you identify that relevant product market, then Reliance was new. Reliance was not enjoying the dominant position. And since there was no dominant position, there's no point of abuse, right? So likewise, we need to determine whether there was a relevant, in which market are we talking about with respect to the product or with respect to the geographical region. I may be very dominant at a particular place. I may not be very dominant at the other place. So which relevant market are we talking about? And then we determine dominance on the basis that how much market share do I have? What is the size of my enterprise? What is the size of other competitors? How much consumers are dependent upon me, and what is the market structure? So based on that, it is being decided that whether a person enjoys a dominant position or not. And if a person enjoys a dominant position, thereafter inquiry happens by CCI under section 19, whether there's prohibition or whether there's abuse of dominant position or not. If there is, then thereafter orders are being passed. So these all we read in section number 1931 later, right? Fine, ma'am. Then we come to combination, section number 5. A lot of mergers that happen. Supposedly two companies are being merged into one. We have to look at the provisions of Companies Act. We also have to, maybe they are listed, we have to look at a lot of SEBI compliances. We also have to look at the provisions of Competition Act. Because if the big giant market players, they come together, maybe they may create a monopoly, and after creating monopoly they may hinder the competition. So somehow it is important to keep a check on them whether we should allow this merger or not. So CCI plays a very important role, Competition Commission of India plays a very important role in approving these combinations. And every merger has to be approved by CCI? No. You may acquire shares, you may acquire assets, you may acquire control. If it exceeds the threshold, ma'am, what is the threshold? See, there is a huge section number 5 and it's given in different parts, but we have it a summarized version, which I've shared in the notes as well. So with that summary, you have to recall that limits. And if it exceeds that limit, if it exceeds the threshold, then that is going to be termed as combination. Now, you cannot enter into any combination which is creating an appreciable adverse effect on competition. So you have to make an application to CCI, and once CCI approves your combination, thereafter only it will be treated as valid. So any person or enterprise, if they're entering into any combination, they have to get the board's approval, and within 30 days they have to submit the proposal for approval to CCI. Now, CCI will reply within 210 days. If CCI does not reply within this time, then it is deemed acceptance. So if they reply, great. If they reply as negative, then you cannot enter into that combination. If they don't reply, even better, because it is deemed acceptance. Fine. Okay, fine, ma'am. Now, CCI may also inquire into the same. Now, the next set or the next part that we have is Competition Commission of India. What is Competition Commission of India, CCI, that we have been talking so far? Central government establishes this Competition Commission of India, which is going to be a body corporate. First of all, its composition: chairperson, minimum 2 members, maximum 6 members. In case there is a vacancy, senior most person will take charge, and they are going to be appointed from the selection committee, which is going to maintains a panel, and from that the appointment takes place for 5 years. Retirement age 65 years. They have to take an oath of office and secrecy before they enter the office. Right. Once they're appointed, they're not appointed for life. They can resign by giving 3 months notice to central government. Central government may permit to go earlier. They can also be removed by CG if they acquire some other employment, because during their membership, employment is not allowed. If they turn insolvent, incapable, or offense, right? On these grounds, they can be removed, right? Clear. But if they acquired financial interest, or if they abused their position, which everyone will deny, that no, I have not acquired any financial interest, or I have not abused my position. If any member of CCI abuses their position, then in such a case, if they have been put allegation on these 2 grounds, then first of all, CG will refer to Supreme Court. Supreme Court will hold an inquiry and present a report, and thereafter CG will remove them. On other grounds, CG can remove them directly. Right. During membership, you are not allowed for any other paid employment. And after termination also, you're not allowed for till 2 years in connection with any prior party, any enterprise which has been a party to CCI prior to that. You cannot be employed in that for 2 years, and others it's allowed. Right. Coming back to our main chart. So composition, I think, is clear. What powers do they have? They have the power to inquire. They have the power to pass order. They have a lot of miscellaneous powers to make rules, regulations, a lot of things are there. Duties are given in section number 18. They are the same duties as we talk about the objectives of the Act. So whatever objectives of the Act, the same duties have been conferred to CCI also. Meetings, we'll read section number 22. Office, head office at Delhi and offices at other places in India. Fine, ma'am. Meetings. So they are going to meet at such place and time as prescribed. Quorum 3 members. Chairperson presides over the meeting. If he is not present, the senior most person will preside over the meeting. The decisions will be taken by majority, and there will be a casting vote of the chairperson. Now, after we read this whole part of Competition Commission of India, we also have something called as appointment of Director General. So for the purpose of assisting the Competition Commission, central government also appoints Director General, and then there will be officers, other employees, and all that part, right? Then we come to one of the most important sections, again, section number 19, which talks about inquiry into Section 3, Section 4. Section 3 means anti-competitive agreement. Section 4 means dominant possession. So reference may be made to CCI by central government, state government, or statutory authority. So central CCI receives some information from these people, or on receipt of some other information, or CMO2 also. CCI may hold an inquiry that some enterprise has contravened Section 3 or Section 4. Of course, keeping in view the factors. What factors, ma'am? The same factors that we have read in the respective sections. That if you want to determine the appreciable adverse, whether an agreement has appreciable adverse effect or not, you have to check whether it hinders the entry of new entrants or something like that, right? If I talk about dominant position, how much market share you have, what is the size of your enterprise, what is the size of your competitors, so the same factors that we have read before, and based on that CCI passes the order. We have an elaborate procedure of inquiry which is being given, that how inquiry takes place under section 19. Reference is made by CCI, right? Okay. We look at the reference, we find that there is no prima facie case, we'll dismiss it. CCI is going to dismiss it. But if they find that, okay, prima facie, we think that, okay, investigation should be done. So they will direct the Director General that you prepare an investigation report and thereafter forward to the parties concerned. Now, Director General recommends that yes, there is contravention, so further inquiry will take place. If they recommend that there is no contravention, then we need to see how the inquiry was initiated. Was it initiated because a reference by CG, SG or SA was made? If yes, then we must look at their perspective. Why did they made a reference? Because according to the Director General's report, there is no contravention. So we will invite their comments. And based on their comments, if we find that yes, prima facie case exists, then we will proceed with the reference and further inquiry will take place. If no, then we'll return the reference. If it was some other, we'll just give the opportunity of being heard to whoever informed us, and then further inquiry is not needed. If it is needed, it will be carried out. Otherwise, it will be dismissed. Based on the inquiry, CCI comes to a conclusion that whether there were anti-competitive agreements or whether there was abuse of dominant position, right? If yes, these are the orders which may be passed by the commission. They can impose penalty. These are the maximum penalties which may be imposed. They can ask to discontinue whatever you are doing and not to re-enter, modify whatever agreement you have made, or maybe pass other orders, or maybe divide the dominant enterprise, maybe pass order for division. So this is also something which is possible. Next, we come to combination. Right. Now listen to me. Every prospective combination has to give an application to CCI and approve and get their approval, and thereafter you can enter into combination. But there may be some mergers which did not get the approval of CCI, but still they have merged. So there could be some combination which has taken effect without CCI's approval, and CCI got this information suo motu or on some source. So within 1 year of the combination taking effect, if they find that no, prima facie there is no appreciable adverse effect on this merger, on this combination is the merger which exceeds the threshold, fine, acquisition which exceeds the threshold. So if there is prima facie no appreciable adverse effect, they'll just impose penalty and pass orders, whatever they think like. But if there is appreciable adverse effect, then this combination cannot take place unless we inquire and assure that this is not going to happen. So they will issue show cause notice to the parties to respond within 30 days that why we should not carry out investigation. After the receipt of response from the parties, within 7 days, CCI will direct the parties that you publish all the details to bring it to the public knowledge, and the public will file objections if they have. CCI can ask for additional information. CCI will also refer to the Director General and ask for their report. What do they think? And after considering the objections, after considering the DG's report, after considering all the information that has been obtained, they will pass the orders according to section 31. That means they may approve your combination, they may reject your combination, or they may ask to modify the combination. Now you have agreed to merge on certain terms, and now some authority is asking you to modify the terms. You may not accept it. If you accept it, fine, the combination takes place. If you do not accept it, then no combination. Supposedly you also have some amendment in mind and you say, okay, fine, we accept this, but slightly change this also. Then you can submit your amendment. If the commission agrees, approve. If the commission disagrees, they'll give you 30 days to accept this modification that they suggested. If you accept it, approval. If you don't accept, then it is considered to have appreciable adverse effect, and this is a combination which will not be allowed. So we have this elaborate section number 31, which talks about all of that, right? Apart from that, CCI has the power to issue interim orders also. If you want to appear before CCI, you can appear in person, or you can take the help of some representative like chartered accountant or company secretary or cost accountants or legal practitioners. Commission has the power to regulate their own procedure. They're not bound by code of civil procedure. They can rectify the orders. There are sections of penalties, section 43, 43A, 42. So you have to read about that penalties also. Then comes a section which is almost common in many of the acts, contravention by companies. So if companies do this offense, of course, they cannot be put behind the bars. So there is officer in default also who takes charge. Then you have something called as competition advocacy. What is competition advocacy? See, with regard to competition, central government makes a lot of policies. Now, whatever policies central government is making, central government gives a reference to CCI. CCI within 60 days give their opinion. Now they are only giving their opinion that this should be made or this should be made with this modification, because on ground, real grounds or practical grounds, they are the ones who are working. Ground reality, they know it better, right? So their opinion counts a lot, but it's not going to bind central government or state government, right? They constitute a fund which is called as competition fund, where the money comes from central government, and out of that fund, all the salaries and everything is being paid, accounts are being maintained, audit is being done, and returns are also being filed. Apart from that, we have something called as appeals. If you're unhappy with the orders of CCI, you can go to CAT. If you're unhappy, you can go to Supreme Court. CCI is Competition Commission of India. CAT is Competition Appellate Tribunal, which ideally does not exist now. The powers and the functions have been taken over by NCLAT. Right, so we do not have ideally Competition Appellate Tribunal now, but we read this only in our Act. So this is not very relevant, but the chairperson, maximum 2 members, I'm not teaching you the composition. I'm not revising the composition with you, because I don't think this should ever be asked in examination, although it can be. So you must read it once, right? And then thereafter you can make an appeal to Supreme Court within 60 days if you are still dissatisfied. Sometimes commission can be superseded by central government. So if they do not discharge their functions the way they are supposed to, central government can supersede that. Central government can also make rules. The commission, CCI, has the power to make regulations. So all that miscellaneous trivial sections which are not very relevant, and we are not considering them as a part of our revision, right? Thank you.